Good afternoon, traders. John Caruso coming to you here for the afternoon of April 26th with your currency commentary for the day. First, we'll take a look back and take a look at some of the numbers we've seen come out. New home sales on Monday, we did miss expectations at 511,000. The market was looking for 522. Durable goods this morning came out at 0.8%, expectations of 1.6%, and consumer confidence 94.2. Versus an expected 96. So we've got three top tier numbers that all missed expectations. So what's on everybody's mind is tomorrow, of course, the FOMC report that is released at 1 o'clock. Will they signal dovish? Will they signal hawkish towards the June meeting? And if they move towards dovish, how much of that dovishness is already priced into the market? And if they flip towards hawkish and keep a June interest rate hike on the table, what does that mean for the market? So first, we'll look at the dollar right now, 94.37, down 42 points. I think that's it's dropped back the last 2 days on the soft U.S. data. So we've had a rough start to the week. I do have a downside risk potentially at 93.50. Okay, but when I look at the dollar chart on a weekly basis, we are in the lower half of its trading range. So from current levels, I do believe there's more upside potential than downside potential in the U.S. dollar. So the upside, you want to look for 95.21. If we can penetrate 95.21, which was last week's high, I can get you up to about 96.20, another 100 points higher from last week's high. So that's something to keep an eye on. Again, the Feds, whether they're dovish or hawkish, if they're hawkish, I certainly think the U.S. dollar is only one way it can go, and that's to the upside. If they go dovish, how much of that dovishness is already priced into the market? If the dollar does slide off of a dovish stance on the Fed, I think it's going to be temporary. So keep that in mind. Looking at the euro is up 48 points right now at 113.24. The inverse of the U.S. dollar, I do believe that the euro is encountering some significant resistance at present levels. I think on the top side, maybe around 114 is a good area to become bearish if we can approach that level. Excuse me. But I certainly think there's much more downside potential in the euro than upside from present levels. Right now, it's up 48 points, clearly benefiting from the weak U.S. data. I'll hit on the yen real quick because that's been on a lot of people's mind. Right now we're flat, but we are well off the highs. If you look at the chart, it does look like we do have a near-term top in the yen. I could see some more downside in the yen as the week drags on. And we do have a lot of data coming out tonight from Japan. So that's something to keep an eye on as the market moves forward. So the yen and the dollar have been trading inversely to one another. I do believe that could continue here in the near term. I think there's more downside coming in the yen in the near term over the next couple of weeks, and more upside in the next couple of weeks in the dollar. So that's all I have for you today. Feel free to give me a call anytime, 800-669-5354. Futures and options on futures may involve substantial risk. It may not be suitable for all investors.